Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, today we will update our view on the Japanese yen. On the euro currency guys, although yesterday was really dramatic action, so market was trying to pass through the resistance, hasn't quite reached it, dropped lower at the end of the session and has formed another bearish grabber on the daily time frame chart. But at the same time guys, if you'll take a look at our 4-hour time frame chart, you'll see that the euro currency is still calling inside the downward channel that we have discussed in some sort of the flag pattern on the weekly chart and the daily, and no breakout has followed yet. So that's why today it's not really very interesting to talk on the euro currency again, because the major setup that we have prepared previously is still valid. So if we will get the failure of the grabbers that we have on the daily chart, then probably we should get some kind of the ABCD to the upside. If market will drop below 1 or 7 lows and break the last major VIP support, then in this case we probably will get the continuation down. But right now mostly market stands in decision in wide swings on the euro currency, so it's not really interesting, at least compares to the setup that we have on the Japanese yen. So now you will see it, you'll understand why I have chosen the Japanese yen right now to talk. Last time when we have talked on the Japanese yen, it was the 10th of the December, and before that we have prepared the weekly research on the Japanese yen, and right now market is following to our analysis. The major idea on the Japanese yen, besides of the technical picture, we have some fundamentals issues that trigger the strength of the yen when the market turns in some tensions in the geopolitical or war tension. So the demand for the safe haven assets increases, and usually the most common understanding of the safe haven currencies is US dollar and the Japanese yen. That's why right now the financial authorities in the Japan are screaming about another yen appreciation, because they have put a lot of work to trigger the inflation, but right now the dropping demand and the price of the commodities and the growing tensions again has triggered the Japanese yen strength, and that's what we currently see on the chart. So if you remember our analysis on the technical picture, we said that market right now has some bearish patterns are forming. When I talk bearish, I mean the chart of the Japanese yen. I mean the United States dollar Japanese yen currency pair, not the Japanese yen directly. So we have the bearish patterns are forming. So on the monthly chart, as we have estimated, we have the double repo sell pattern that takes the shape of the hand shoulders on the weekly chart that you see right now on your screen. And when we have talked on this was approximately in this area, we said the first destination point will be the neckline of this pattern. That is where we have stopped last time. So guys, if you have taken the shorts and if you trade in general with us, with our recommendations, you probably right now should have the short position on the Japanese yen. And right now, why we also prepare the update, market has reached an area where we should think about the taking the profit, or at least to tight the stop, or take the profit on the half of the position. Because right now, as you can see, market stands in an area where we do not recommend to take any short positions, because market has hit our first destination. This is the neckline. Also guys, take a look, this was just not the neckline, this is also the 3-8 VIP support. That is the weekly chart guys, this big scale. We have the weekly VIP support 116.50 approximately. From that low to this top, it's very significant swing. 3-8, and also guys, what's more important, this is the weekly result. So this is very nice and strong support where the market could show the bounce up. This in general could lead even to the failure of the hand shoulders if something will change also in the fundamental part and financial part of the Japanese economy, and the comments from the Bank of Japan or something of that sort. So right now we do not know what it will be, whether it will be just minor retracement, market to correct, to abandon the area of the oversold, and market later will drop. But this combination sometimes becomes deadly for the bears when the neckline combines with the oversold and the fib level. This carries very significant risk of the failure of the pattern. That also could happen. But this is not really the issue that we are carrying currently. Now we are mostly thinking about the possible taking the long position on the daily chart. So on the monthly, guys, on the weekly chart with the short position, maybe we will get the continuation later. But currently, guys, think about that taking the profit on your shorts, because this is really a risk that market could show the bounce up, especially based on the patterns that you will see on the lower time frame chart. Our particular interest stands on the daily chart. And what we have here, we have nice thrust down that we have traded on the weekly, right, to the neckline. Market has dropped below the weekly pivot point and wasn't able to pass back above it, to move it back above it. Also, guys, market on the way down has broken all monthly pivots. Pivot point, pivot support 1, pivot support 2. So this is really indicates the bearish trend. But right now, as market stands in strong support, our particular attention will stand on this possible pattern. It's just an upward directional one and calls double repo buy. So take a look what we have already. Perfect thrust down. Here was not interruption of the thrust because here we do not have the 3-8 retracement on that leg. It's just small minor pause of the flag pattern has been formed. Market even hasn't closed above the 3x3. So as you can see, price stands below the 3x3. So that's why we should treat it as a whole thrust without interruption point. So right now we have market has hit support. Right now we have close above the 3x3. Today we could get the close below, and after that we should wait just for forming of the some kind of the bottom or something of that sort, and then second close above the 3x3. If this will happen, the minimum target of this pattern will be 120 even, 50% resistance, the whole thrust down. Not really small potential. It's approximately 300 pips to the upside. It's a very significant trade. That's why I think that you should decide about taking the profit on the shorts, because this retracement could be significant. On the 4-hour time frame chart, the body of the double repo pattern could take the shape of the butterfly. So take a look at it. So it's developing right now. Since thrust down is significant, it could show another leg down. It's a bit lower to the 116.22 area approximately, and then turn to the upside. That could become my favorite shape of the double repo. I like when the body of the double repo take the shape of the butterfly, by many reasons. I have explained it millions of times already. One of the reasons because we could anticipate the double repo relatively safe based on the butterfly, so you could take the position based on the butterfly, but in general you are taking the position on the double repo pattern. That gives you the better entry point and tighter stop. So in fact, when you're taking the position based on the butterfly but trade double repo, you get the position almost on the extreme point and very tight stop compares to the classical approach of the trading. That's the first moment. Second moment, guys, when the market forms the double repo body by the butterfly, it creates another second close below the 3x3 deeper than the first one, and that makes the breakout traders taking the short, but then they become trapped in the wrong direction with the stops slightly above these highs. As market returns right back down, trigger their stops, usually double repo accelerates further. So existing of the second bottom is greater, lower than the first one. This is the additional advantage of the double repo pattern. So other words speaking, the double repo with the second bottom deeper than the first one is better than the double repo with the equals bottoms, or even when the second bottom is slightly higher than the first one. That's why I like the butterflies as the body of the double repo pattern. So as you can see, this is really great and clear potential with this trade. It's definitely worth of our attention, and let's keep watching what will happen. So on the next week we probably should get some completion So this situation should be resolved somehow. But the chance on the upward retracement is really very significant right now.